Welcome, everyone. My guest today is Lead Analyst Logan Mohtashami to talk about the government shutdown, the ADP jobs report, the latest in the Lisa Cook case, and even more. First, I want to thank our sponsor, Trust and Will, for making this episode possible. Logan, welcome back to the podcast.
What a day! Man, a lot has happened. It's Wednesday morning. Usually it's just purchase apps and what the bond market is doing, but the government shut down. Right? Where I was up having popcorn with my Scream buddies, getting on the phone and saying, "What's up?" And it happened. So here we are. We have a lot to talk about today.
We have a lot to talk about today. So you and I weren't even going to have a podcast today because I already had one with the California Mortgage Bankers Association, which lovely interview, which I had done earlier. So I was like, no, this is great. And then overnight, of course, government shut down, but also that jobs report. So we're also going to talk about Lisa Cook. We have so much to talk about. Let's start with the jobs report because that was pretty bad.
So the ADP had another negative print. The revisions weren't great. And Trump can't fire the ADP person. By the way, Trump withdrew the person that was going to run for the BLS. So I think everyone on X was like, okay, that's good because that guy should not have been at all, even in contention. So that's a good thing that it's not going to be him running the BLS next. However, the ADP report is private and it's basically the same story. It's the same story. Things really started to slow down at the start of the year. And if that one jobs report a few months ago didn't have a blowout federal government or state government hiring, we wouldn't have wasted 1 month of just dealing with that. But now it's a trend, right? And it's October. Right? It's
October.
So it's not like, okay, you could have one. There's always at least 2 to 3 reports a year that miss estimates. Okay, this is not it. This is a trend. And then we always like to take the aggregate data. What's happening? Manufacturing jobs are being lost. Residential construction jobs are being lost. Right. Especially contract trades or jobs are being lost. So it's not shocking. But this puts the Fed in another bind if you believe they cared about the labor market getting soft as this, which I don't. We talked about that last time, that the labor market is getting softer and they don't care until it breaks. GDP is still above 3%. Consumption is still good. They're just going to let it ride until jobless claims break because they can't hide. They can't hide behind jobless claims sprinting up higher. So for now, bond yields fell just a little bit, a few basis points. Mortgage pricing flat, slightly lower. Not too much action on that side, but it's just the same continuing trend. And I just don't think the Fed cares really that much.
I know you do. Okay, so the ADP report, this is the one that you normally don't pay that much attention to because we have all those other ones. Why do you think that? Is it just because it confirms the trend of what we've already seen that you're paying attention to this one?
Well, we have no more reports this week unless the government comes back. So that's
good point.
There's number one. Like I always say, the ADP report is the least important, but it just continues a trend, right? So there was a good question I got asked. The 10-year yield is still above 4%, but the jobs data is noticeably worse, right? Job growth is noticeably worse from last year. So if you track the BLS and the ADP, the private sector jobs are really declining on a net basis now together. But last year, boy, the 10-year yield really thought we were going into a recession, which wasn't the case. There were still enough jobs being created and GDP was still fine, but it overreacted to the downside. The Hodor line was broken. Sarah, they broke the Hodor line, and what do they think was going to happen? So we reversed back up here. But now the bond market's a little bit more disciplined this year than last year, and they're keeping things at bay. I think it looks very normal to me if you believe labor over inflation and that the Fed is modestly restricted. Now we've had 7 presidents talk about this. We're modestly restricted. They are so predictable. It is a beautiful thing to watch them when they make their speeches.
So when you saw the jobs report this morning, were you expecting the 10-year yield and the mortgage rates to go down lower than they did, or is it about right for you?
No, I mean, it's just about right. I personally believe this. Jerome Powell set the gauntlet down when he came on TV and he said, zero job growth would be acceptable. Right? 0 to 50,000. When you say that, you're telling bond traders, I don't care if we have one job growth every month for the rest of life. It doesn't matter. Get your trades in line. So naturally, we're down here because the labor market's softening. But if this had happened last year, well, we're touching the Gandalf line. We're bringing "you shall not pass" again. So I think the bond market is a little bit in line with what the Fed, and also the Federal Reserve raised inflation expectations this year. So the growth rate of inflation is still not on target. So it looks about right? If we broke 380 and jobless claim is rising, I'm going to come out here and say, we don't belong here because the Fed is telling us we want to be modestly restrictive. So it really hasn't been the best for Powell after he had that little arrogant little Fed thing 2 meetings ago where he was dismissing everyone. Team Waller, by the way, Team Waller out here who was kind of saying, homies, the private sector job growth isn't looking good and the revisions are all coming negative. And the reason he says that is when you start to get negative revisions, it's typically toward the end of a cycle, like very aggressively. So something's going to have to turn to change it. So Christopher Waller was right. Jerome Powell got Beth Hammock. I wonder what Beth Hammock is probably coming out there this morning going, it's just one report. I don't know why everybody's getting it. It's just one report. It's one. Why? Unemployment rate's low. It's one report. So it is what it is. This is right up how I thought the Fed would act, and it's just on cue. So it's confusing to a lot of people because they think rates should go lower in the 10 years. Like, if you believe 65 to 75% of this is Fed policy, then it looks right.
It looks right. So interesting. Like you said, this is the only jobs report we're going to have because we won't have the Jobs Friday report unless now if somehow they reopen the government, they come to an agreement over the next couple of days. Does that give them enough time, or do you think they would kick that report out till next week?
They would probably want to release it as soon as possible.
Okay.
Right. So, but again, you got to get everybody back to work. There's just, it's not looking good for Jobs Week. Okay. So, so at least we got 2 reports in, and both reports just confirmed the same trend. Again, the Federal Reserve in 2024 said that we track jobless claims and they're still low. That's the cue. That's that line in the sand. Right. And they're going to say, Logan was right about us. We really need to see the labor market break before, we want to get really dovish. So everything looks about right in that context with where we are in the economy, because the economy is still growing 3%. We're still consuming goods and services. Housing demand is picking up a little bit more. So it isn't like a free fall, of consumption. Credit spreads are, there's all these things that are normal with an expansion still, but the jobs number are just like.
So another point about the government shutdown. So we have I think we have 3 or 4 stories right now on HousingWire.com about how does the government shutdown affect people buying houses, right? Like what does that look like? It's not a huge effect, but it is about 1,500 real estate transactions a day. They feel like will be affected because it's not just the government shutdown, it's also the expiration of the National Flood Insurance Program, which happened to come on the exact same day as this, which is pretty unusual. I mean, the National Flood Insurance Program has been, expired different times over the years. It just hasn't ever come at the same time as a government shutdown. So they do think there's going to be some, short-term things, but it's not great if you're trying to close. If you're trying to close a loan this week, not great.
Well, I mean, I might be wrong here, but if you're trying to get a 4506T confirmation from the IRS about someone's income, that shouldn't be working right now. So I don't know if you just set that aside and go, we'll get that after the fact, but there's a whole process, right? Maybe I'm wrong, but maybe they found a way to work around that. But if you can't get that verification of income from the IRS, things just don't work normal. So hopefully this is just, a few days and then whatever, they can just move on. But, it's just a lot of drama. And
it's a lot of drama. And at some point, this kind of drama, I mean, a shutdown always filters down to like consumer sentiment because they can feel like things are out of control. What's going on, no matter which party they blame, there's, it depends on which headline you read, right? And interestingly, on the HUD website right now, you pull up the HUD website and there's a political message about how the shutdown is the Republicans' fault and stuff like that. I've heard from several people who are like, "Are you guys going to cover this?" And it's like it's a tough one to cover because it's like, yeah, that's totally not normal for a government agency like HUD to have a political message. We're in a pretty not normal environment, so
Wait a second. Did they say it's the Republicans,
yeah.
not the Democrats?
I'm sorry. Democrats,
Okay.
not
All right.
Republicans.
I was going to go, wait a second.
Yeah. You're like,
I
why
was
would that
like,
do?
whoa.
No. Okay.
Somebody snuck in there. And I was like, oh, it's like the guy from Airplane who took the cord out and is like, all right,
No. Pardon me. Yes. No, it says Democrats are to blame. And so I've heard from a lot of people like, hey, I was just trying to check on stuff and I get this political message from HUD. What's going on? And
that sounds like HUD, right now under Republican
yes.
rule. So
yeah,
it is what it is, guys. This is, what do I say about politics, Sarah? Politics.
Many
blood-sucking parasites, right?
Yes.
And it's just like, I gave up on that stuff like 10 years ago. I gotta tell you, my life is great. Y'all just worry about this stuff all the time. Me, I'm just looking at it. My thing's a 10-year-old.
My point, though, is that like a government shutdown, when people say, right now consumers are very focused on the jobs reports because that's kind of filtered down to them, and then the government shutdown. So I don't know. I mean, on the other hand, if those things affected mortgage rates going down enough, that everyone would be really happy about that in housing. So just a lot of stuff happening right now.
Yeah. There's a lot of stuff. So, and then of course, we got Lisa Cook news.
Lisa
today.
Cook? Yes, we did.
Where Trump's going to have to wait till January till they hear her arguments, and then at that point they'll deal with it via the Supreme Court. So, she isn't that important in the big scheme of things because Trump wants lower rates, and she would have been one of the more dovish people out there. It's Beth Hammack who, if Beth Hammack and Lisa Cook switched spots, in terms of voting, it would have been a different story. But Lisa Cook would have been dovish. She's actually one of the few people that think productivity can actually grow with AI. So it's not like a huge thing for him. They could wait until January, but Trump's going to try to get as many of his people in there. And if short-term rates go down, again, the ARM spreads year over year are starting to gap out. So you can get sub 6% rates with ARMs. We wrote about that. We talked about that in the podcast where, ARM lending might grow just because, rates are going to be in the fives. They already are in the fives. So you could even get, high fours, low fives eventually. So Lisa Cook's story, it's something Popcorn Watch will get, but we could put that aside until January where the Supreme Court will hear it.
Yep. So Trump had asked them to fast track it. And I mean, that is fast for the Supreme Court. They could have done it, they could have made a ruling, but they wanted to hear her side, I guess. So that is interesting. So that's all like the political news. We did have purchase applications. Again, another private survey that came out. So that's nice that we still got that from MBA. And what did that show?
Purchase application data. Now it's 9 weeks that we've had sub 6.64%, down 1% week to week, up 16% year over year. So now that we take the aggregate data, 7 positives, 2 negatives, 9 straight weeks of double-digit year-over-year growth. It's funny because Mike Simonson was asking me about this on X today. He said, why do you always use the 12 to 14 weeks? And I say that this purchase application data is a tricky trend survey. How many years have you and I been doing this? 5 years,
many.
Right?
And
all I tell you is that this is a tricky trend survey to track. And at one point, we were in the mid-1990s with purchase application data, which means No Doubt was the best new band out there. Gangster Paradise was the number one song, and the thing just blew up higher, and we're in 2014 levels. But that doesn't mean that existing home sales are at 4.75 million. The times that we have seen growth in existing home sales, we get at least 12 to 14 weeks, week to week positive. Right? This is the first year, which would be really interesting. If we could get just 5 more weeks of positive week-to-week data within some type of time frame, even if it's 18 weeks or 19 weeks. Then we got positive 12 weeks and then positive year over year. I really want to see how the sales data work, because we have sellers that fill out an application that are sitting there and waiting for somebody to buy their house so they could buy another house, and the transaction model goes. But in this case, it's been the best 9 weeks of the year. And we haven't quite had the reversal in rates like we did last year. I think last year, from October 1st to October 9th, something like that, mortgage rates went from 620 to 670. That's a very strong reversal. Well, the spreads are better this year. And when yields go up, the spreads actually improve. And now the 10-year yield is I think 411, 412 last time I saw. We've had the Fed rate cut, and we just had a very mild move up higher. So the bond market, again, is much more behaved this year than last year. And the labor data is softer, right? If the labor data wasn't softer and the spreads didn't get better, we're at 7% mortgage rates right now. Right. So thankfully, the bond market, everyone hug a spread, hug a bond market trader. They took the labor over inflation. And by the way, it is October 1st. Sarah Wheeler, do you know what it means? It's October 1st. So to the gentleman that said, nobody will buy the 10-year yield at 5% because we're broke. It'll never trade under 5% ever. Foreigners are leaving. The U.S. is done. It's finished. What? Excuse me? Literally from the point at that statement, the 10-year yield never went above 5%. It has been literally under 5%. And y'all had everything this year. You had inflation. You had tariffs. You had $10 trillion of debt that has to be refinanced, and there's no way we could do it without a recession. Y'all threw everything out there, and we're sitting here at 412. Just saying. Because y'all got lippy out there, and you're all talking. I'm just saying, y'all got lippy, and you're talking, and y'all think you can get away with this. It ain't happening that way.
I just think it's so funny. You're like,
everyone, line them all up.
I'm like, that's not just saying. You're just like ranting against it. It was not just saying. So anyway, well, we are glad that you're the one giving us this information, Logan, as always. And thanks for jumping on for sort of a special edition, because I mean, just we had too much stuff happening today. It's crazy out there. We'll keep you on a speed dial. So thank you, Logan.
Thank you all. And always remember, all American bears have failed for a reason. Right? Economic cycles come and go. We can model this stuff. We can do this, but they have failed for a reason. And that graveyard is deep. We're here to help everyone out. So ask as many questions. And Mortgage Banking Summit, October 7th, Dallas, Texas. And for all of you, Altos Research, we're having a free webinar to try to talk about how to read data properly. Come join that. Register is free. Learn, educate yourself. Education is a great thing. Reading is a great thing.
It's an amazing thing. We are going to have such a good time at the Mortgage Banking Summit. Can't wait to see people there. I met people at the Rocket Pro event that were going to be joining us. We met people at the Acuma. We met people at American Pacific Mortgage. Like we know a ton of people are coming. We're really excited about it.
And you know, everyone likes the shiny shirts I wear. And just want to tell you something. I got a brand new shiny shirt for Dallas.
Okay, we should have like a poll on what
this has got a little bit of a Halloween theme to it, so you know.
Oh my gosh!
So it's going to be fun. Okay. It's going to be fun October.
It is going to be fun October. Okay, talk to you soon, Logan. Thanks.